We're going to bring in Todd Jablonski, the Principal Financial Chief Investment Officer of Principal Portfolio Strategies. And one of the things that I think everyone keeps wondering is just how bad will the recession be? It's almost as if we expect there to be a recession, but will it be something we've not seen in our lifetimes? Todd?
Well, going into the COVID crisis, a lot of, I think, market prognosticators were looking at 2008, 2009, and looking for learnings around the depth of what can happen from a deep recession. I think there are a lot of reasons to believe why this situation is a bit different. I think fundamentally we're in a much stronger circumstance before the coronavirus and associated shocks hit the market. I have seen forecasts calling for a deep short-term recession sort of mid-year this year, and it's certainly possible that both Europe and the U.S. produce a negative economic growth this year, while you see China eke out a slightly positive growth. I think more importantly, however, is the wave of worry that investors are digesting and taking that wave of worry as it goes from coronavirus through the OPEC meetings into volatility, illiquidity, and now focusing on debt issues around the market.
Hey, Todd, real quick, you brought up the debt issues. Before I bring Julie in for the next question, I just want to ask you the steps the Fed took with the money market backstop, the $10 billion from the Treasury's emergency fund. How is this going to play out as we go forward?
I think the market views all of the monetary policy announcements the Fed's been releasing, the ECB's been putting out, even Bank of Japan, as positive. But it's our view that this is not an issue which monetary policy nor fiscal policy can solve by itself. What investors are looking for is a directional shift in the number of infections globally. I think that's the key feature to watch. When markets, I believe, will find a bottom when investors have confidence that policymakers, again, beyond just fiscal and monetary, but more in a governmental role, have taken the right steps to give us a more optimistic outlook for risks associated with coronavirus.
Julie, I believe you have a question for him.
I do. Todd, I want to ask you about what you're doing from an investing perspective. I think we've heard a rising chorus of investors in the market who have gotten more and more alarmed about what's going to happen to the U.S. economy and therefore what you should be doing with your investments. And I think it makes sense. We're all under a lot of personal stress in addition to the sort of bigger macro stresses that we're seeing externally. How are you approaching all of this? How are you thinking about your strategy right now?
Well, as a multi-asset class investor, my lead headline is we've seen episodes like this before. Investors, I think, ought not run and take risk off the table because events like this do happen throughout history. And in fact, we should expect them. What I think is perhaps the most reasonable response and what we're practicing today in our multi-asset portfolios is using cash flows, whether it's a subscription, a dividend receivable, an income stream receivable, and we're using that to go up in risk towards equity and credit, and we're steering our outflows, whether they be expenses, dividends payable, interest payable, and using that to reduce some of our appreciated core fixed income. It's our view that it's too early for a large, discrete movement up in risk, but the wise investor is no doubt preparing their playbook and understanding what that discrete movement looks like when we do have firm data that gives us confidence to go up in risk as our next move.
Dan, you're up.
Yeah, Todd, you look at these companies and you say, well, outside of the fact that there are lockdowns, there's no real fundamental issue beyond that for them. So as far as recovery goes, once the lockdowns are lifted and we start to see consumers go back out and start to spend again, what's the chance that we'll see a recovery quickly rather than kind of something along the lines of a U-shape?
No doubt the global economy is a finely tuned engine. For it to be functioning at maximum efficiency, all the moving components have to be aligned without slack in the system. And I think it'll take some time for us to recover to get back to that point. I do, however, agree with your fundamental case that companies did enjoy a pretty solid business environment, and we were seeing improvements in manufacturing all the way through the end of February. I'd highlight that we were coming out of the third slowdown since the global financial crisis, 2008, 2009, that had been manufacturing led. So seeing some of that strength and seeing PMIs get up above 50 gave us a lot of optimism coming into the year. Coronavirus has disrupted a lot of that fundamental strength.
Todd, what we're hearing from the fiscal side as well as the monetary side is really just kind of throw everything at this right now, because this is kind of an unprecedented event. And yet I can't help but wonder about the debt that's waiting on the other end. I mean, when we're talking about something like $1 trillion stimulus at a time when we were already looking at record debt, how are you viewing that broader picture, or how should we be looking at that right now?
Well, debt has been the global economy's favorite way of working their way out of these kinds of events. From 2008 to 2009, and now through to today, we have seen the appetite for central banks to now begin owning debt as being the preferred means of funding our way through. I think long term, what this means is that you'll have to look very, very carefully at debt levels associated with firms and make discriminations based on where the debt exists and where, in fact, you have firms with dead business models, zombie companies, that will be eventually unable to repay those debts. I think, to me, this speaks to the case for active management and having the kind of discernment around the types of firms, the types of debt issues in which we invest, to really make sure there's credit worthiness and that these firms can thrive and grow critically coming out of the recovery.
All right, Todd Jablonski is joining us from Seattle, Washington. We appreciate your being here at Yahoo Finance.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.